All right, guys, welcome back to another episode of the Four Horsemen of Real Estate podcast. I'm your host, Neil D'Souza. We're going to talk, as we always do, about market trends, market strategies, wealth building. And on today's episode, we're going to get into New Brunswick, Canada. All right, let's go. But why even talk about New Brunswick, Canada? Let's zoom out for a second. There's a lot of cities where we talk about Toronto, Vancouver, Calgary, and these all dominate the headlines. Smart investors have been looking at these places, but a smart investor is also going to be looking for the quiet pickups, where you can quietly pick up cash flowing properties. And those are some places like Moncton, New Brunswick, St. John's, New Brunswick, and Fredericton. These are often going to be at a fraction of the cost of what you would get in some of these other locations. And here's why. In the province of New Brunswick, what you will find, and I don't really want to reveal this secret because I can tell you guys that I'm invested in New Brunswick. And I'll tell you that there is a low acquisition cost right now if you were to look into it. It's easier to enter if you're a new investor. Rents are rising faster than a lot of other provinces in the country, and vacancy rates in some areas, they're below 2%. A lot of people have this idea of what the vacancy rates must look like in a place like the East Coast, in a place like New Brunswick. And that's highly ignorant, guys. People need to live somewhere, and it's not like people in New Brunswick are sleeping on the road. It gets really cold there in the winter. People need places to sleep. Okay, let's just talk about market fundamentals for a second. Let's hit a couple of numbers. Moncton recently was named one of Canada's top emerging cities, and this was a report that came out by Remax Canada. Fredericton has strong population growth. It's been fueled by government jobs, students, and IT expansion. And we know that under the new Liberal government, they've already committed to sustaining more of these different opportunities, growing the government opportunities, and being able to expand the government workforce. And then take a place like St. John, historically blue collar. But now what you're starting to see is sort of a revitalization. You're seeing a lot of different developments. And remember that St. John is the location of the oil refinery. And I'm not positive on this, don't quote me, but I believe there's plans to expand the oil refinery out in St. John, New Brunswick. All right. Now, let's also compare a little the in-migration of Ontario and Alberta, and what you've got in those different markets, and what you see in New Brunswick. It's kind of it's kind of quiet, but it's powerful in how that works out. What kind of deals can you find in New Brunswick? This is where it's like finding gold, especially if you're a cash flow investor. If you're a cash flow focused investor, you're gonna like New Brunswick. You can find triplexes for under $400,000. You can. I mean, a couple years ago, you could have found a 10 to 15 unit for $400,000. You might still be able to find some out there. Now, again, you still need to do your due diligence, the location, all of these kind of things. But when you've got such a low acquisition cost, oftentimes it doesn't take as much to be able to cash flow. That's the point, guys. What do they say? The large numbers. The larger the number, the more input you need, the more people you need, and the higher rents you need. Whereas the lower acquisition costs, you can oftentimes afford to be able to give a far more reasonable rent. And by and large, New Brunswick is a very family-oriented place, so people like that. But you can also have creative strategies like BRRRRs, rent to owns, vendor takebacks. You can stretch your capital much further than you can in a major market. New Brunswick definitely is not the major market unless you go to a place like Moncton, which has been outpacing, I believe, most of the, if not all of the maritime provinces for any of the cities. So it's something to look into if you're interested. Now, I'd prefer you didn't because I like acquiring properties out there. But if you were interested, you should go check it out. Now, what you need to watch out for, it's not all sunshine. It's not all, you know, you're going to make money, cash flow all over the place. There are a lot of older homes. Many are decades and 50 plus years old, and you're going to have to budget for renovations. You're going to have to deal with New Brunswick is a snow a snow province. They get a lot of snow in the winter. You're going to have to budget for maintenance costs, property maintenance costs. If you buy a larger multifamily, somebody needs to plow those driveways and plow the parking lots. That kind of stuff you have to factor in. If you're buying duplexes and that, you're going to have to factor in. If you're going to cover the heating, then you need to make sure that you've got that factored in because it gets pretty cold in the winter in New Brunswick. So these are some of the items. And then there are tenancy laws that are a lot better for landlords in New Brunswick than they are in, say, provinces like Ontario or British Columbia. So that's great. But New Brunswick is slowly trying to bring in more tenancy laws that favor the tenants. So it's something that you're going to have to continue watching and monitoring over the years ahead. But that goes with any investment. You can't just walk away from it and hope it does its job. You've got to continue to maintain it and take care of your tenants, and that's why you get paid. So remember this: smaller towns, less liquidity. If you need to sell fast, first of all, New Brunswick is not the booming province that other provinces might be, but we don't care about the province per se. You're looking at the cities specifically, and New Brunswick has cities that are booming just the same as any other city across the country. But if you decide to go to some of the smaller cities in New Brunswick, just remember properties might not sell as quickly. It's not going to be as liquid as if you were in a GTA or a Vancouver. Now, the growth drivers and long-term vision, I just want to touch on that. What's fueling that in a place like New Brunswick? So what's fueling this right now and what we see is that a couple things. First of all, the fact that housing is cheap, people are literally moving there just to be able to work remotely, but be able to afford low-cost housing. There's already low-cost housing. It's in New Brunswick. It's in New Brunswick and lots of parts in Nova Scotia. There's lots of parts in Ontario that you can find low-cost housing, but oftentimes people don't want to live in some of those segments. But for the people that do, there's lots of beautiful scenery to be able to do that. And people are interested now that we have remote work. There are more and more people that want a slice of retirement while they continue to work. And places like New Brunswick, where you can still find raw land untouched, live by a lake, live by a pond, people are still moving to these provinces. It offers a lower cost of living. The provincial government is welcoming immigration, and they're also welcoming business to the region, hoping to continue that boom. Remember that in New Brunswick, you've got a large section in Ontario, we would call it the 401, but the highway that spans right across the country, there's a large sector of it cutting right through New Brunswick. If you're choosing places anywhere along that highway, you're going to be able to see long-term growth because people want to be along a highway. And there's lots of infrastructure money that's flowing into it as a result of the highways. Schools, hospitals, all of these kinds of things are all happening in New Brunswick right now as we speak, none of them making national news. And it isn't just about flipping triplexes or something like that, but rather planning your capital and placing it in a place where there is demand and growing demand. That's what you really want. You want to go in when there's less competition, growing demand, and allow that wave to grow. You want to be riding that wave. You don't want to be caught under it. So first, pick up a city where you like, maybe look at one of the hubs like Moncton, Fredericton, or St. John. Check into them, start to get a feel for them, understand what the valuations are like. If you're not used to smaller places, you might want to start with Moncton because it's a fairly large city. Work with a local agent, contact someone, get some house pricing, get them to give you some ideas on where to look, what places, what locations, what neighborhoods in a place like Moncton or Fredericton or St. John will actually give you a great return because they're going to be able to break that down for you. Make sure to line up your team, guys. We always talk about that. Teamwork makes the dream work. Some crazy, but build a team, guys, out there. And then finally, always make sure you're doing your due diligence. You're checking out the title. You're checking out all the different pieces. Make sure you know your financing, what's available. Don't sign any contracts until you've got your team in place, someone that can review this stuff for you. And finally, make sure that if you're getting tenants, you do your due diligence there as well. Some of the laws are a little bit different, so familiarize yourself with that so you're not caught with your pants down, unless you want to be caught with your pants down, in which case, that's the end of this episode of the Four Horsemen, a real estate podcast.